Honey, I think the sky is going to fall big time to 36,650. Now, where's the Dow Jones right now? 40,000. To drop to 36,000, you need to have at least a 3,500 points trigger point. Now, do you think this is possible? I know by saying this itself, everyone think I'm crazy, but if you look at statistics, you look at numbers, look at the chart, it's all possible. So let's go into the details right now. Disclaimer apply as usual. Now, let's look at this chart here itself. I'll explain to you shortly about this chart, but you can see that the reason why I'm aiming for this, obviously, is because of this point itself. So I'll come to this later and let you know why the Dow Jones may have to trigger 36,600 in the time to come. Now let's look into this chart here. Now it's going on everywhere. We all know that the U.S. Treasuries is going to be maturing very fast because they basically done a lot of bonds during COVID period for 5 years, 2 years, and 3 years. And because of that itself, right now, the maturity is coming in. And we all know that Elon Musk has already said that if the US do not do any more rate cut, the interest loan itself will kill them and you'll bankrupt the entire White House. And it's true, be told, that's why Donald Trump and Federal Reserve Jerome Powell is fighting head on online, right? But the thing is this, the main important now is the bond market. So some will ask me, Kel, but the bond market has recovered from 86, recovered to 89. So isn't that a good time to look at a buy in the market? Well, look at it carefully. Yes, the bond price did recover, but look at the volume. The volume is pathetic, guys. And look at the William indicator itself. We are actually back to the same common point, and we have a lowering figure. That means that this is a negative divergence. Hence, therefore, I'm pretty sure there will be another wave of selling from next week onwards. And if that actually happens, the stock market will sell. And everybody knows that Jerome Powell itself, right, he is having a lot of loggerheads with the Donald Trump, and Trump obviously been flipping, like, one moment he's going to fire away Powell, but next moment he saw the bond market crashing down. He changed his words. Yes, exactly. When the bond price was actually crashing down itself, this was a very moment where Donald Trump came in and said, you know what, let's not fire Jerome Powell. So he knows the big issue here itself. But of course, when time come to crunch and his particular antics, he will definitely get into some crazy mode again. So Trump says that now the China tariff will drop substantially, but it won't be zero. But China replied back, come on, man, we are not going to talk about this. In fact itself, they think that this Trump shouldn't be crazy here. So we all know that Warren Buffett has said this himself, and he's been buying a lot of the treasuries back then. He knows that now the stock market is really overbought and it's time to really concentrate for the market to drop further than to buy into the market. So Jamie Dimon basically came in and he shared a very important subject here. He states that this sticky inflation will not go away quickly. As a matter of fact, it may continue to rise. And in fact, he wrote to his JP Morgan's clients. He believed that now the S&P 500 might be, the earnings itself is up right now, but he believed that it will be zero or even negative 5% probably in the next week to come. Now, this is from April of 7 right up, so which means that we're talking about next month, May. That's the reason why we need to be very, very careful. And of course, he said the main reason is because of the guidance coming down. And truth be told, right now, we saw sketches coming in and tell the people that, you know what, we do not have any 2025 guidance because of the economic and tariff uncertainty. We also saw that Tesla withdraw guidance. And of course, we have also the Delta Airlines also pull the guidance. So everyone knows that they will rather not say what will happen for 2025. They won't give any expectation because they know that something not good will happen very soon. And if you look at the Buffett indicator, you can see right now we did have a pullback. Now remember when I was covering this itself, when it was climbing back in last year, December, I said that once we hit a higher point, there will be a sell in the market. And by the time itself, the Dow Jones at 42,000. And when it hit 45,000, many people call me and tell me that, Kel, you see, you're wrong, and blah, 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 blah. But when that happened itself, the Dow from 45,000 dropped all the way below 40,000. That keep everybody quiet. Now, the thing is this right now, how low could it go? Based on this, I believe it will test 150% again. So with where we are right now, we're 186% at this moment right now. There need to be another 5 to 10% pull. So because of that, right, you can see at the moment now 186% is significantly overvalued as of 29th of April. And I think that we need to pull. That's the reason why Warren Buffett is not investing, because there's still greed in the market. The earning yields is not coming up, and of course the sustainability itself is not there. So with all the money he has right now, I believe that he just need to wait for a big pull, and that's where he will come in. And I believe that that number will be at 36,600 area. So you look carefully at this chart again. That's my reason. Every time when the Dow Jones is climbing, once it pulls back, you notice that it will actually go for the 200-day moving average by touching it. Interesting, right? Try again over here, and it happened again. All right. So when the market was basically rushing up all the way, okay, it was a little bit crazy back then. And in 2020, when it pulls back, you can see that it basically draws itself like a magnet back to the moving average. And again, it happened when it was at year 2022. When it pulls back again, it came here. Now, this is not the first time I'm covering this. I covered this many times before. So now the thing is this, with marginal miss over here and here, right? Marginal miss. And I believe that right now in the next wave, the market will come and touch this level. So I believe that the market will actually see a bottom between 37,000 area to about 36,600 area. All right. So of course, I will keep on updating this chart along the way. But my point is this, based on this coming on the bond market right now, I believe that the market will shake. There'll be some selling, there'll be panic, and there will be some shakeout in the market. And once the market comes down to this particular good moving average, it will be a very good time to buy into the market, okay, to buy into the market. And then we can ride up by 5 to 10% once again. All right, guys. So it's a sell first and a buyback later for the big run. This is Kel signing off. I hope you will enjoy this video. Have a great day. Bye-bye.